Hi everyone, this is Erich from Traders Helping Traders with this week's Tricks of the Trade. This week, our lesson is devoted a little bit more toward the day traders. The day traders are always under the impression that they need to take a lot of trades in order to be a successful day trader. And quite frankly, that's just not true. Here I have a chart of the mini Dow, the YM, with the Hawk Micro Scalper imposed on it. Now the Hawk Micro Scalper, for those of you who are not familiar with it, is part of the Diversified Trading System, or DTS for short. And this particular system is devised especially to find scalp signals. And the way it works is it works in two parts. It's essentially a red light, green light system, but what you're looking for is when you get the beginnings of a scalp signal, you get this little warning dot, and then when the scalp signal completes, you get a triangle and a hash mark, which is a suggested entry point. So whenever you see one of these triangle and hash marks, that means that you have a complete scalp signal. Now the arrow is just an easy way to keep track of where the market actually brings you in, which bar is your entry bar. And you can see that there are no shortage of signals. These are the day break lines for the day session, but you can see that almost every day we have at least a half a dozen signals, and that's on a quiet day. On a typical day, you can see we have many signals to take. So the question becomes, how many signals do you need in order to be successful? And as I mentioned, most scalpers and day traders think that they need to take every single signal that comes across the board. But that is simply not true. Because the missing component that these traders forget about is your position size. With correct position sizing, you only need to take 2 trades a day. That's right, you only need to take 2 successful trades a day to make very good money. Now, if you manage to take 3 or 4, well, that's even better. But you don't need to take 10 or 12 or 20 scalp trades in a day. And that's what a lot of traders think that they need to do. So let me show you how this works. For instance, here the market opened. Well, we got a signal right out of the open, but let's ignore that one for the moment. Let's look at the next signal. So we get a warning dot, a triangle, and a hash mark. I'm going to roll this over a little bit so it's going to be a little bit easier to use. So this is what it would look like when it's happening. We get a warning dot, a triangle, and a hash mark. Now this tool that you see here on the side of my chart, this is the all-new Trade Manager. And what the Trade Manager does is it allows me to set the correct position size for my account. So right now I'm running the risk model. I'm only risking 2% of my account on this trade. So it's very prudent money management. So let's see how this would work. So I take my entry and I'm going to enter here. Now, Trade Manager also provides me with a suggested stop loss placement, which is notated by these blue dots. So let's say I place my stop loss there, and I have a 10 tick profit target. So in the YM, I have a $50 profit target. Now I know that doesn't sound like a lot. You're thinking, Erich, you know, if I take 2 trades a day at $50, that's only $100. I'm sorry, that doesn't really pay the bills. And I hear you, but look at what happens with correct position sizing. With correct position sizing, according to this particular setup, I can afford to take 3 contracts. So with 3 contracts, I'm actually going to have the potential profit of making $150. Well, if I do that 2 or 3 times a day, I'm making between $300 and $450 a day on only 2 trades. And the probability of having 2 successful trades is actually very high, especially when you know that you only need to take 2 trades a day. You can afford to be a little choosy. You can afford to ignore the signals that might not be so promising. You can wait for the cherry trades. So here we have this particular setup. So it's going to be worth $150 in profit, and that is not unusual. So if we're able to do that 2, 3, maybe even 4 times a day, we're going to be earning between $300 and $600 a day. And that is just for my current position size. As my account grows, my position size will grow. So whereas I'm only able to afford 3 contracts right now, as my account grows, I'll eventually be able to afford 4 contracts, 5 contracts, 6 contracts, and my profits will keep going up. Say I build up my account to the point where I can take 6 contracts on a trade. Well, now all of a sudden I'm looking at $300 profit. Well, if I can do that 3 times a day, only 3 times a day, I will make $900 a day in profit. And once again, knowing that, I can avoid the weaker signals. I can stick with the stronger signals. This is the thing that novice traders forget. They think they need to take every single signal that comes along, and then they wonder why their account is not making money. Well, it boils down to overtrading and poor money management. You can see that with correct money management, you don't need to take a lot of trades. I guarantee you there are a lot of people working a lot harder to make $300 a day, and all you need to do is to take 2 winning trades. So keep that in mind next time you're trading. You don't need to take a lot of trades. Focus in on taking the quality trades and just focus on getting the winners. You may not always hit the home run trade, but if you can scalp in and out and you can capitalize on your position size, I guarantee you your account will start to grow and you will be making more money than you ever imagined was possible. And that is this week's Tricks of the Trade.